Good evening, students. It's good to see you all again. I welcome you all in our revisionary classes. I am C. Ankit Sharma, your income tax faculty for the session. In today's session, we will be covering the provision of basic concept and residential status. So we will revise the provisions and we will take questions which is from your MTP, RTP, and case scenario. So that would really going to help you for your examination. So that's a kind of a practice session in which we will discuss a lot of practical questions. And these questions are not going to be easy. These questions are like the question which is going to be asked in the examination. So I believe you all must be studying very hard to achieve the goal of your life to become a chartered accountant as soon as possible. So I believe that you have completed your syllabus. You have already in the revision mode. Just give me a second. This YouTube, I need to check so I will be able to see whether class is going well. Okay, now it's done. Fine. So once again, I welcome you all in our today's session, and let me see if there is some question. Daksh Vikram Jain is saying, good evening, sir. Sir, if after all classes are over and I still have doubt for other things, how can I ask you or contact you for clearance of the same? I guess that is for, there's an app also, I guess, or a link which you can ask from the BOS. There would be a WhatsApp group, etc. Right? Okay, Mac is saying good evening. I'm fine, Mac. How are you? Vishaka, good evening. Amal, good evening. So good to see you all once again. And before starting the class, let's take a quick revision of the topic which we are going to discuss in today's session. Okay. So in today's session, we are going to discuss the basic concepts and residential status revisions. So first of all, let's discuss the main topics of basic concept, what we already have gone through in our normal classes. Student, let me remind you, these are revisionary classes. So we are more focused on the practical questions, which is based on your MTP, RTP, case scenario, etc. So we are not going to revise the whole topic of basic concept and residential status in detail, because if you have any issue in these topics, then you can go and watch the lectures in full. So today we are just going to summarize that what we have discussed in these topic, and then we will move on to our numerical part and practical problems. So in case of basic concept, I have divided that chapter into 5 major topics, what we have already discussed. First was the introduction part of the chapter, in which in that introduction part, we have gone through that what is the meaning of income tax, the basis of chargeability, etc. Why it is applicable, types of taxes, etc. So that was the main theoretical, or we can say the fundamental provision of this Income Tax Act, in which we have seen why the need of income tax in our country, how it is applicable, the component of income tax, etc., etc. The second main part was definitions. Definitions are very important, very vital to make you understand the different concept which we have discussed in the later part, like the definition of person, assessee, previous year, assessment year, etc. And of course, income. The definition of income we have already discussed in this part. There were some special provisions also. We can treat them like exceptions, like when there is a basic concept that previous year income is always taxed in the assessment year. But there is some exception in which previous year income is going to be taxed in the same year. So we have gone through with those exceptions when a person is leaving India, in case of non-resident shipping business, etc. So there were certain cases in which government needs to collect taxes in the previous year only. Because if government will not be able to collect tax in those cases in the previous year, so maybe government won't be able to collect the tax in the assessment year. So we have discussed those exceptions, and we have also discussed the concept and the cases of black money. The cases was like unexplained investment, unexplained money, unexplained cash credit entries, hundis, etc. And the special tax rate also. So will tell me the tax rate in case of black money. What is the total effective tax rate in case of black money cases? Anybody is here who is going to tell me the total tax rate in case of black money, including surcharge and education and health cess. So including cess and surcharge, what is going to be the tax rate in case of black money? Let me see. Somebody has answered. Gayatri is saying 78%. Mithili is saying 30%. Mithili, it's not 30% in case of black money. Manas is absolutely correct. It was 78%. So now, can you explain the separate rates in this category? What is the tax rate? How much is surcharge and how much is cess? Can you tell me the bifurcation? What would be the tax rate in this scenario? What is going to be the surcharge rate and what is going to be the cess rate? Chalo, for your help, I am telling you the cess rate. Cess rate is 4%. Now you have to tell me these two rates separately in case of black money. So the aggregate would be 78%. Who will tell me the separate rates in case of black money? I believe you must have revised those topics. Like if you are joining this class, so there is a basic need that you have to revise the provision before this class. So if you have already revised this chapter 1, chapter 2, then this class would be really fruitful. It would be more beneficial to all of you. Simran has given the answer. Tax rate 60, surcharge is 25% of tax rate, and the cess is 4%. Absolutely right, Simran. Well done. It's 60%. Surcharge is 25% of this rate. So that will be effectively 15%. And the aggregate would be 75%. And on this, 4% would be cess. That would be 3%. So the aggregate would be 78%. Well done, Simran. Moving next. In this topic, previous year when we have discussed, there was also a concept of income we have discussed. The concept of income is regarding income is taxed on due basis or receipt basis, gross basis or net basis, casual receipt, regular receipt, etc. So we have already gone through with this concept topic also in this third main topic category. The fourth category was pure numerical. So technically we can say these were theoretical topic generally, but this was pure numerical topic of our basic concept chapter number 1, which is regarding rates and surcharge and cess, and one very important, and that is rebate also. So we have discussed these 4 things, which is really helpful to calculate our tax liability. In this case, we have gone through with 2 regimes. We have default tax regime. We have optional tax regime also. We have separate rates for default tax regime. The basic exemption limit is 4 lakh. The age of individual and the status is irrelevant. But in case of optional tax regime, there are 3 basic exemption limit for individuals on the basis of age. It could be 5 lakh, up to 5 lakh. There is no taxability. In case of super senior citizen, in case of senior citizen, the basic exemption limit is 3 lakh. In case of other individual, it was 2,50,000. And also for HUF, etc., it's 2,50,000. Then there is separate rate that up to 4 lakh, its tax rate is nil in case of default tax regime. Up to 2.5 lakh, there is benefit of exemption in case of optional tax regime. Then there is tax rate as per slab wise. So the slab rates are like 5%, 20%, 10%, 15%, depending on the specific region. After applying the tax calculation on the slab basis, now there was rebate concept. I'm going to ask a very interesting question in case of rebate from all of you. So the rebate under default tax regime was 2 types of rebate. That could be if your total income does not exceed 12 lakh rupees, you can claim a rebate of maximum 60,000 or the amount of tax, whichever is lower. But even if your total income is exceeding 12 lakh, you still can claim rebate under default tax regime. So can you tell me, in case your total income exceeding 12 lakh, up to which limit? I have told you, up to which limit rebate can be claimed. So I have shown you a calculation in our normal class, and I have told you for the purpose of examination, if the total income is up to this limit, you need to calculate the rebate. But if the total income exceeding this limit, then you need not to calculate the rebate. Let me see if somebody answer. Very good, Vishakha. 1270580. Exactly, that's the limit up to which you need to calculate the rebate. Else, you need to skip the rebate provision in case of default tax regime. In case of optional tax regime, the rebate provision is very simple. If your income is up to rupees 5 lakh, you can claim the rebate of 12,500 rupees or the amount of tax, whichever is low. Once the income is exceeding 5 lakh rupees, you cannot claim the rebate benefit under optional tax regime. Clear? Now, after the rebate provision, there was a concept of surcharge. Again, in case of default tax regime and under optional tax regime, the surcharge concept say up to 50 lakh. If your total income is up to 50 lakh, there is no surcharge applicability. If your income exceeding 50 lakh, up to 1 crore, then surcharge is 10%. Then from 1 crore to 2 crore, the surcharge would be higher rate, then it's higher rate. So can you tell me the difference I have taught you in the normal class in the surcharge provisions under default tax regime and optional tax regime? There is only one difference in case of default tax regime surcharge concept and in case of optional tax regime surcharge concept. So can you tell me that difference, what we have discussed in our normal class? What is the difference regarding surcharge in case of default tax regime and optional tax regime? Somebody answered, very good. Mac is saying surcharge in case of default only 37%. Yes, if your total income is exceeding 5 crore, in case of optional tax regime, if your total income exceeding 5 crore, the surcharge would be 37%. If your income does not exceed 5 crore, it would be 25%. But in case of default tax regime, if your income exceeding 2 crore, the surcharge would be 25%. Even if it exceeds 5 crore, does not matter, it will still remain 25%. So the maximum surcharge is 25% in case of default tax regime, and in case of optional tax regime, the maximum surcharge rate is 37%. Understood? Now the cess concept. Cess is very easy. If there is tax, 4% cess you need to apply. I've also discussed a format. Whenever there is calculation of tax required, please follow this format. We have already discussed this format in detail in our normal classes. I've told you, please calculate initially tax as per slab rate. Then use rebate. Even if that in that question rebate is applicable or not, please make it in a habit that you should write this format. So whenever you will write it down, this reduction of rebate, your brain will automatically think about the provision that whether rebate is applicable in this question or not. So if applicable, then reduce it. If does not applicable, skip it. Then you need to apply the surcharge provision. So if the income exceeding the specified limit, you need to apply the surcharge. So please make a habit that whenever there is a tax calculation, please follow these 4 steps. Whether these are applicable or not, just write it down. So if it is applicable, your brain will automatically tell you that in this question, surcharge is applicable because you will automatically going to recall the provision. So if surcharge is going to be there, then please add it. After this addition and subtraction, if there is tax, you need to apply 4% cess in all cases. So that would be your final tax liability. Okay, we have discussed that. A very interesting and very important concept regarding marginal relief was also there. Remember the marginal relief concept, which says there could be situation when your income is less than tax, or we can say when the tax is more than your income. So in that situation, income tax will provide you a discount that's called marginal relief. And that would be on certain cases when there is surcharge applicability. So whenever your income is slightly above the limit on which surcharge is applicable, suppose on 51 lakh rupees, 51 lakh 10,000, etc. On that slightly limit, you need to calculate the marginal relief also. And we have also discussed the marginal relief concept in various cases. So that was the part 4 of basic concept provision. Now, the last part was under basic concept provision. The main part was agricultural income. In that, there was theoretical provision, which actually make you understand what is the meaning of agricultural income. So, agricultural income includes the normal agricultural production, but it also includes rental income via letting out your agricultural land for agricultural purpose to someone else, the rent from farm building, even the income from nursery operation, etc., also form part of agricultural income if certain conditions is satisfied. And now there was one more pure numerical topic under agricultural income was integration. Integration of agricultural income with non-agricultural income. So if there are certain condition has been satisfied, that in case of individual HUF, etc., only it is applicable. When the slab rate is applicable, only in that case, this integration concept can be applicable in a question. When your agricultural income exceeding 5,000 rupees and your non-agricultural income is exceeding the basic exemption limit. So only if all these three conditions fulfill, then you are able to calculate the tax as per integration provision. The steps we have discussed with example in detail in that chapter. And the last but not the least, one more numerical concept was composite business. In case of agricultural business, there could be composite business cases. Composite business means when there is any activity in which agricultural as well as non-agricultural activities are involved. Those businesses are called composite business, like making sugar from sugarcane. So there would be two parts, agricultural activities and non-agricultural activities. So the profit you are earning from agricultural activities are going to be exempted, and the profit which is proportionate to your non-agricultural activity is going to be your business income and tax. In this composite business cases also, we have seen that there are some business having specific percentage like tea, coffee, rubber. And for other, there was different rule to calculate your agricultural and non-agricultural income. I believe you must have a recap of the provision of basic concept chapter number 1, whatever we have discussed in our normal classes. Okay. Now the second chapter, what we are going to discuss today is residential status. Our chapter number 2, residential status and incidence of tax. As you know, the impact of this chapter is on your taxability. So whether any income is going to be taxed in India or not, it depends upon your residential status. This is very important to find out the residential status of an assessee to find out the taxability of income in our country. In this chapter, we have gone through the residential status provision for individuals. There was HUF, there was company, and other categories. So the other categories and company provisions were very easy. In case of other, there was a concept of control and management, where the business meetings are held. On the basis of that, we can find out the residential status. In case of company, this concept is based on place of effective management. On that basis, you can find out the residential status of a company. In case of HUF also, it is depend upon control and management initially to find out whether it's a resident or non-resident, and thereafter we can find out the sub-classification. But the most complex An interesting and important provision was in case of individual. So that individual could be a normal resident as per the provision under section 6(1), or he or she could be a deemed resident under section 6(1)(a). Always remember, first of all, we have to check whether he or she is a normal resident or not. If the normal resident condition does not fulfill, only in that condition, you can go and check the deemed resident concept. You cannot apply this concept initially. First of all, you have to check this concept, and if condition does not fulfill, then you can check that in particularly case that person is a deemed resident or not. In case of normal resident, we have also gone through certain basic conditions. Those we can say normal condition, which is applicable in all cases. And those were more than 182 days or equivalent to in your previous year in India, or more than equal to 60 days in India, and more than equal to 365 days in 4 preceding previous year. So for normal persons, both conditions need to be checked. And if any of these condition has been fulfilled, then that person become resident, else, and if not, he or she would become non-resident if any of condition has not fulfilled. But as I have told you in the normal class also, in my opinion, the question would be framed on the basis of special cases. There were 3 special cases in case of individual. That if you are an individual and citizen of India, and if you are going outside India, then only first condition need to be checked. Like we are in India for equal to or more than 182 days, you are a resident, else you would be non-resident. This condition is not applicable. Second, and if you are a citizen or person of Indian origin who reside outside India but comes to visit India only. And in this case also, if you're going outside India for employment or as a member of Indian ship, only in that situation, this first special case is applicable. Not in case of you are going for visit, etc. But if you are residing outside India, you are a citizen or person of Indian origin, and you are coming to visit India, in that situation, only first condition need to be checked, else you would be a non-resident. But if you are a citizen or person of Indian origin, reside outside India, comes to visit India, and if you have income exceeding 15 lakh from Indian sources, then you have one condition, this 182 day, and one more condition will be there to check your residential status. More than equal to 120 days in previous year, and more than equal to 365 days in 4 preceding previous year. So if you fulfill any of these, you would be a resident, else you would be a non-resident. Understood? If any of these conditions does not fulfill, and you will not become resident under any of these basic or special condition, then we can move on to deemed resident concept. And it says, if you are a citizen and reside outside India and have exceeding 15 lakh rupees income from Indian sources and non-taxed at any territory in any country. So in that situation, you would be automatically treated as deemed resident under section 6(1)(a). And a deemed resident will always be a resident and not ordinary resident. And if you become a resident, then there is subclassification. Whether you would be a resident and not ordinary resident, or you would be a resident or ordinary resident. So there are specific conditions to become a resident and not ordinary resident. The general conditions, if you are less than 730 days in 7 preceding previous year, you will be regarded as resident and not ordinary resident. One more condition is there. If you are in India as a non-resident for more than equal to 9 years out of 10 preceding previous year, you will be called a resident and not ordinary resident. In case of this category of person, one additional condition is also there. And if you're able to fulfill that, you could be treated as a resident and not ordinary resident. So we have discussed these conditions in detail with example, with questions in our normal classes. That was just a recap. So when we will go through with our question, which is based on MTP, RTP, etc., you will have a recap of these provision that would be easy to solve those questions or understand these questions when we are going to solve it. So now in this session, we are going to solve practical questions one by one. Let me tell you, in our revisionary class, there is not going to be any thought for the day because now exams are coming. So we need to utilize the full time. And of course, there would not be any story, etc. Okay, so that would be a pure practical numerical based question from now. Okay. So one by one, we are going to discuss question. And let me tell you one thing. After solving these MTP, RTP questions in case scenario, I can assure you, your confidence is going to be really high. Because these are the questions which has been already asked in the past examinations. And I will tell you how to solve question in the examination. How to read a question is very important. We have already solved some question of test knowledge, etc. But now this question is going to help you a lot. That's going to improve your knowledge. You will be able to see some very interesting cases, very important questions, very important scenarios in these questions. Not been discussed yet. So one by one, we are going to discuss these questions. The first question in front of you is, Mr. Akash, an Indian citizen. So first of all, we have to read the question properly. And let me tell you, when there's a question, there's a numerical question, the first thing is to understand the requirement of a question. Do not go for solution until you are able to understand the requirement. So if you are able to understand what is the requirement of a question, you will be able to find out the components which we require to solve that question. If you see this question, first of all, I am going to see what is the requirement of question. The question is going to ask you, determine the residential status of Mr. Akash and compute his total income for assessment year so and so under default tax regime. So we have to find out the residential status and the total income under default tax regime. Now I'm clear what exactly the requirement of a question. So I can process this question now in a better way. Mr. Akash, an Indian citizen. You can see when there is a question of residential status, I always believe that would be regarding the special cases. So if you are an Indian citizen, a person of Indian origin, etc., so you should understand now the special condition would be applicable in this question, or the probability of applying the special case is very high. Age is 45 years, worked in XYZ Limited in Delhi. He got a job offer from ABC, California. That means employment. You can mark these important words or line in the examination also. You know, these words will definitely going to impact your question or your solution. So you should have a habit to underline the important things in your question. On 1st June 2024, he left India for the first time. That means before this date, he was always in India. 31st July and joined ABC on 8th August 2024. During the previous year 25-26, Mr. Akash visited India from 25-5-25 to 22-9-25. So this is my previous year. He went outside India in the preceding previous year. But in my current previous year, he came for visit. Akash visited India in our previous year. He did not left India for employment in current year. He visited India in previous year. He earned the following income from the previous year 25-26, and the informations are here. First of all, in a question which belongs to finding out the residential status of an individual, you have to understand whether it is regarding normal case or a special case. So now you can see in our previous year, 25-26, he visit India and he is a citizen. So if any citizen who comes to visit India in previous year, so whether it's a special case or normal case, first of all, you should identify this, whether it's a special case or normal case. Of course, it's a special case. In case of special cases, you can mark with pencil, etc. There is no issue, okay? It is a special case. So in a special case, there were three special cases. One is when you are going outside India. One is you comes to visit India. And third is also for visit. But if your income exceeding 15 lakh from Indian source. So for this condition or this condition, because our question relate with the visit, so that means our question deals in point number 2 and 3 both. So a citizen is visiting India in the previous year. So more than equal to 182 days condition, first of all, we have to check. So he came to India on 25th May 2025 and he was in India till 22 September 25. So how many days he was in India? Let's calculate. In the month of May, he came to India on 25th. So the day of arriving in India and the day of departure will be assumed as stay in India. Clear? So from 25, 26, 27, 28, 29, 30 and 31. 7 days of May he was in India. Then June, July, August and up to 22nd of September he was in India. So total number of days is 121. So in previous year, he was in India for 121 days. So definitely he is not able to satisfy this 182 day condition. So now we need to move on to this third condition. The third condition says it will be applicable if your total income from Indian sources exceeding 15 lakh. So for that purpose, we have to find out in this question the total income from Indian sources. One by one, I will ask you and you will answer whether this income will be treated as income from Indian sources or not. Okay. Chalo. First one. Salary from ABC, California, received in California. So whether it is an income which is arise from India or from Indian sources or not. Let me see the answer. Mithali is saying no. Vishaka is saying no, no, no. Gayatri is saying no. Aditya is saying no. Mehak is saying no. Very well done. Varna Mandal is also saying no. Very good. Of course, correct. The correct answer is, of course, that is not an Indian source income. Next, dividend from Indian companies. Okay, what is your opinion, student? Dividend from Indians. Simran is saying yes. Vitali is saying yes. Vishaka is saying yes. And Amal is saying yes. Aditya is saying yes. Correct. Of course, this is from Indian sources. So we will consider this income for the calculation of 15 lakh from Indian source income. Next is agricultural income from land situated in Nepal, received in Nepal. What is? It is Indian source or not? Of course, it is not from Indian source, so we will not consider it. Rent received receivable from house property in Delhi. So what is your opinion, students? This 550 would be inclusive. It should be included for Indian source income or not? Everybody is saying yes, exactly. But there is a catch. You cannot consider full 5,50,000 because this is for income from house property. We need to take the net taxable income. So in case of income from house property, 30% would be the deduction, statutory deduction. So we can consider 70% for the purpose of Indian source income. That would be 3,85,000. Clear? Now the last one. Profit from a profession in California, which was set up in India. So if business is controlled or set up from India, we assume it as Indian source. This 6 lakh is also going to be the part of Indian source income. The aggregate would be 14,85,000. But for the purpose of condition 3, we should have income exceeding 15 lakh. So this condition is not fulfilled also. Now we can move on to the deemed resident concept. But again, in that concept, income should exceed 15 lakh, which is not in this case. So deemed resident concept is also not applicable in this case. So what should be the residential status? If you cannot fulfill any condition to become a resident, that means you will be a non-resident. Interesting question. So in this case, the assessee would be non-resident. Now the requirement of question was the residential status. We have found the answer, but it is also required to calculate the total income. Now in case of non-resident, only two kinds of incomes are taxable in India. If it is arise or earn or deemed to arise or earn in India, or it is received or deemed to receive. So out of these 5 income, if any income does fall in any of these two categories, that is going to be the taxable income in India. As you can see, this cannot be included. Dividend from Indian company, yes. So 5 lakh would be the part of his income, even he is a non-resident. This agriculture income cannot be part. This house property income would be the part of the income. This control is non-taxable in case of non-resident. The income which is set up from India is taxable for resident and ordinary resident, resident and not ordinary resident, but not in case of non-resident. So only these two incomes are is taxable income or total income under the income tax. So the answer would be 8,85,000. I have uploaded this sheet of question on the portal. You can download it. And I will also upload the answer after today's class. Okay. So this is giving you the view that how to solve a question. So from this question number 1, you should understand, first of all, we have to understand the requirement of question. Then we have to start our question. I have seen some student, they start reading question and start solving in their brain. Okay, this will be this treatment, but maybe the treatment is not required. Once in this question, suppose if you start reading this question and you can see the age, and if you are not seen what's the requirement of question, maybe this age factor is also important for you, that okay, the tax liability would be depending upon the age. So the exemption would be 2,50,000 if that is an optional tax regime, etc. So because the tax calculation is not required, so this age criteria is irrelevant for my case. So once you read the requirement, you can filter your things in the question, whether it's relevant for me or irrelevant. Understood? Chalo. Moving on to question number 2. Let me see if there is any query. No query yet. Well done. So Mrs. Sia D'Souza is an American, got married to Mr. Kabir. Now is a very good news. When there is other than Indian citizen or POI. So now you know special cases are gone. And once special cases are gone in any question, so the question is very easy because you need not to apply the special cases, deemed resident concept, etc. Need to solve the question on the basis of basic condition. But again, as I've told you, first of all, we need to see what is the requirement of question. The question is asking you residential status, of course, and her total income chargeable to tax, assuming she has shifted out of the default tax regime. That means she is under optional tax regime. Now, Mrs. Sia D'Souza, an American, got married to Mr. Kabir of India in New York on 14th February 2020. So this is not my previous year, and came to India for the first time on 18th March 25. Again, this is out of my previous year. But after March, that would be April. From April 1, 2025, of course, that would be the part of my previous year. That means she was in India from 18th March till 16th August 25. She left for Australia. She returned to India again on 23rd March 2026. That means again in the my previous year. On 1/4/25, she purchased a flat that is for her income status. She had taken a loan while in India during previous years, so and so she has received gifts. So for the purpose of finding out the residential status, this information is relevant because special case is not applicable, so Indian source incomes, etc. are irrelevant. So on the basis of this information, now we have to check both condition on Mrs. Sia D'Souza. More than equal to 182 days in India in previous year, or more than equal to 60 days previous year, more than equal to 365 days in 4 preceding previous year. Now we have to see how many days she was in India. So she came on 18th March. That means from 1st April 2025, she was in India. So from April, I will take 30 days, May, June, July. On 16th August, she went back, and on 23rd March, she again came. So 23rd would be included in India, and aggregate would be 147 days. As you can see, she is not able to satisfy this condition, but she is satisfying this condition. But before that, she was not in India ever. In the last year, she was in India for only some days, like 14 days she was in India. From 18th March till 31st of March, 14 days she was in India in 4 preceding previous year. So what would be the status of Mrs. Sia D'Souza student? Vishakha is saying non-resident. Very good. Gayatri saying non-resident. Soumya non-resident. Meg is saying non-resident. Vitali is saying non-resident. Well done. Exactly. So she would be a non-resident. And let me tell you, these questions are not easy questions. These are questions which has been already asked in your past examination. Whatever question we are solving, a lot of question has been asked in the past year examination. So I'm just trying to show you how to attempt a question. That is also a very scientific base. That how to attempt a question is very important for examination. Do not panic. Read the question, read the requirement, find out your component for the purpose of solution and solving in part. So we are not bothered about the computation of total income of Mrs. Sia D'Souza. We first need to find out the residential status. Now, as I know she is a non-resident, now we know in case of non-resident only 2 kinds of incomes are taxable. Let's move on to this. On 1st April 25, she has purchased a flat in Mumbai which was let out to Mr. Samin on a rent of 26,000 per month from 1st June 2025. So a flat in Mumbai has been let out. So can you tell me which income we are talking about? which kind of income she's earning or whatever income she's earning, in which head this income should be included. So I will apply the provision of that specific head. There's a flat, there's a building, and she is getting rent. So of course it is a part of income from house property. So now we will focus on the income from house property provision. So in case of income from house property, because the property has been let out from 1st June, so that means only 10 months property was let out. So if you calculate the GAV, that would be 2,60,000, as no other municipal value, fair rent, standard rent has been given in that question. The municipal taxes paid was also not in question. So that is again become my annual value. Now we will charge 30% standard deduction of this value. That would be 78,000. The remaining taxable value would be 182,000. Now in this case, she has taken a loan on which interest is 2,05,000. We are solving this question under optional tax regime. Can you tell me how much interest, maximum interest we can claim in this case? Total interest she has paid 2,05,000. So can you tell me how, which is the maximum limit of interest we can claim in this scenario? Mithali is saying 10,000. Why 10,000? Where I have taught you the limit of 10,000. Gayatri is saying fully allowed. Anyone else? Amal is saying 1/5. Simran is saying full. Gayatri said Tia is saying 30,000. Anyone else? Amal, 1/5 is only in case of pre-construction period interest. There is no information of pre-construction period interest, so that is not the case. Okay. Anyone else? The interest deduction would be, student. Somebody answered. Vishakha Goel is saying 2 lakh. Very well then. Exactly, I was waiting for that answer of 2 lakh rupees because it's a wrong answer. So the correct answer is full amount is allowed. Because Vishakha, the 2 lakh limit is in case of self-occupied property, not in case of let out property. So if your property is let out or deemed let out, there is no interest limit is there. You can allowed as much interest as you want. So full interest can be allowed in this situation and it will result in loss of 23,000. Clear? So it's not completed yet. This is income from house property. So technically there is a loss of 23,000. Now, while in India during the previous year 25-26, she had received a gold chain from her in-laws worth rupees 1,50,000 and rupees 1,65,000 from very close friend of her husband. So now we are talking about which kind of income, that is income from other source, gift provision. So our brain should move on to the income from other source provision and we should recall the provision of gift. That means when you receive something without consideration or for inadequate consideration. So this is a non-monetary item she received. A gold chain worth rupees 150 from her in-laws. In-laws fall under definition of relative and gift from relatives are exempted. But gift from friend exceeding 50,000 rupees is going to be fully taxable. So this 1,65,000 is going to be an income from other source. Now, if you see, the income from house property is in negative and the income from other sources in positive. And we are under optional tax regime. In case of default tax regime, the house property losses cannot be set off from any other head of income. But in case of optional tax regime, you can set off this loss against your income from other source income. So after applying that, your GTI would become 1,42,000 rupees. And that would be your total income also, because there is no chapter 6A deduction has been given in the question. So the answer would be 1,42,000. So this kind of question would be an examination for almost 6 months. And if you go through with this question, you can see there is nothing difficult. You have to make short-term goals. In the same way, you have to solve your question in short term, in part. If while reading question, in the starting, if you start reading question, and if when you read this 2,05,000, if you start thinking what amount deduction of interest should be there, that is not the right way of solving a question, because you will waste your time. Read the question. If any information is disturbing you, do not focus on that until the situation comes. So first of all, we have to find out the residential status. Then we will think about this 2,05,000, and then we'll move on to this income from other source concept. Understood? Sure. Moving on to the next question. Amal Roy is saying, sir, can this income from house property loss be carried forward to next year without setting off this year? No, Amal. Setting of provision is mandate. You have to set it off. If you are not able to set off in current year, the loss will be lapse. Okay. Third question. Miss Geeta, a citizen of India. So as soon as you will see a citizen of India, so now we know the special case could be there in case of residential status. Clear? So of course, the first of all, the requirement of question and the regime is very important to find out in a question. You are required to determine the residential status of Ms. Geeta and compute the business income and agriculture income of Ms. Geeta for assessment year 26-27. Clear? Now we have to solve this question and we have to find out the residential status first. For that, we have the information. Ms. Geeta, a citizen of India, got married to Mr. Peter of Australia and left India for the first time on 20th 8th 25. She has not visited India again during the previous year 25-26. She has derived the following income for the year ended on 31st March 26. It's a very, very important question. Mark my point. This question is going to teach you a very interesting and a very new condition, which you have not gone through yet, I believe. This kind of question is not in your test your knowledge question, etc. That's why Institute is arranging these revisionary classes. So you will encounter new kind of questions, new kind of situations that will enhance your knowledge. Maybe some of your friend is saying, what is the use of these revisionary classes? Only practical question is going to be discussed. We have already done it. No. After today's class, I can assure you, you will have certain edge from that student who did not taking these classes. I can promise you. If you'll ask this question to your friend who did not take this class, he won't be able to answer this question correctly. And suppose what? If this kind of scenario question has been asked in the examination, what he or she can lose? A lot. So we know what we are going to deliver to you. That is really, really precious. So question number 3, chalo, I'll ask you now just tell me one thing. After reading this concept, can you tell me it is a question of normal condition, basic condition, or a special case is applicable? Think about it and let me know. Aditya is saying is special case. Why Aditya? Why special case? Okay, Simran is also saying special case. Soumya is saying normal case. Gayatri is saying normal case. Miss Geeta is leaving India permanently. Remember, she's getting married. She's not going to visit outside India. She's leaving India permanently. Normal case by Mehak. Aditya is saying the question is different. Vishaka is saying normal case. So I can see some of you are saying normal case. Some of you are saying special case. And that's correct. And this is a different case. Absolutely. Aditya is saying that's a different case. Yes, that's a different case. Yes. So let me tell you, this is a normal case. This is not need to solve as per special case. Special case number 1 says if any citizen leaving India going outside India, but the condition has been specified for employment purpose or as a crew member of an Indian ship. Only in two situations you can apply this special case. So in law, we cannot use our logic. Even if she is going outside India permanently, but that was not a condition. In the special case number 1, it has been written that for outside India for employment and marriage and as a crew member, no, marriage condition is not there. So until it has been specifically written, we cannot assume things in law. Law needs to be followed as it has been written. So that means it's a normal case. And in this normal case, we have to apply both conditions. To check if Geeta is a resident or non-resident. So condition 1 would be this 182 days or more in previous year, more than equal to 60 days in previous year, and more than equal to 365 days in 4 preceding previous. So in this case, if you calculate number of days, because she left India on 20th of August. So from April till 20th of August, April 30, May, June, July, and August. Okay. So that would be 142 days. So we can clearly see this condition cannot be fulfilled. Now the second condition we are going to check, and the condition number 2, in current year she is 142 days, so this 60 days condition is fulfilled, and of course she was in India before this, so this 365 days condition also satisfied. So she became a resident. Once someone became resident, then the next step is the sub-classification. Once she became the resident, now we need to check these two conditions. If any of these conditions fulfill, she will become resident and not ordinary resident. Less than 730 days in 7 preceding previous year, because she was in India. She never went outside India before this 20th August. So this condition cannot be fulfilled because she would be in India for all number of days in last 7 preceding previous. And the second condition, 10 years non-resident at least, 10 years or more non-resident. So she is the always resident because she was in India all her life before this 20th of August. So again, not fulfilled. So she will become a resident and ordinary resident in India. Any confusion in this question, students? Very good. So now someone become resident and ordinary resident. And which income is going to be taxed? All incomes, whether received in India, outside India, arise in India, outside India, does not matter. That is going to be taxed. Because it's a case of agricultural income, so that could be exempted part we need to remove. Now, income from sale of centrifuge latex, that means rubber, processed from rubber plant grown in Kanyakumari. So in case of rubber plant, if you are manufacturing something, you are manufacturing latex, so 35% is going to be taxable and 65% is going to be exempted. So the 35% part would be 52,500, your taxable value. Income from sale of coffee grown, cured, roasted and grounded in Colombo. Sale consideration was received in Chennai. So of course taxable in India, and in this case the taxable value would be, how much taxable value would be there? In case of coffee, what is the percentage we should apply? Is Mac saying, sir, please, I can't understand how to define this 60 days. Can you please explain, sir? I'm not understanding your question. What does that mean? How to define this 60 days? That's a condition, Mehak, that you need to be in India either for 60 days in previous year. So in our example, Geeta was in India for, I guess, 142 days. So this 60 days condition has been fulfilled. Gayatri is saying 40, Amal is saying 730, Gayatri is saying 40%, 60%, and 40%. Now let me tell you, all answers are wrong. Anyone else who can give the correct answer in case of point number 2? Simran is saying complete 5 lakh taxable because agricultural outside India. Perfect. You have forgot, student, that we are talking about Colombo. The agricultural activity has been done in Colombo. Colombo is in Sri Lanka, outside India. As in the above question, there was income from Nepal. So it cannot be considered as agricultural income at all. Because in case of agricultural income, the agricultural land should be situated in India. In this example, because the agricultural land is outside India, so this full income is your taxable income. There is nothing agricultural, it's a pure business income. Understood? These kind of small things you will learn in these classes. In our revisioning classes, you will learn these small cases and understand how costly it could be. If that kind of question is going to be asked in examination and you did not prepared for it. Now, if you mistaken in this point, I can assure you, your entire life, now you will not mistake at least for this one. So if we have learned about the marriage case today, that if you are going outside India for marriage, then both condition applicable. Then I can assure you in your entire life, you have learned now that in case of marriage, the special case is not applicable. So that's the power of learning. Whenever you do mistake, and if you learn from that, you never forget it. So because in all questions now, if there's any agricultural income, now you will automatically check whether it's in India or not. And if it is not in India, you are going to tax it completely. Okay. Now, income from sale of tea grown and manufactured in West Bengal. Now, this would be my agricultural income, and the 40% part is going to be agricultural income. That would be 4,80,000. Clear? Now, income from sapling and seeding grown in a nursery at Cochin. Basic operation was not carried out by her online. Still, it would be regarded as agricultural income and 100% exempted. Whether basic operation is not there, still in case of nursery operation, full income is treated as agricultural income. So the taxable income would be 10,32,500. As I have told you, this question is very important. We have learned at least two very important cases in this question. One is regarding marriage and somebody is going outside India, and the other is about the agricultural income. Yes, Amal, we need a sharp eye as well as a sharp brain to solve a question because it is income tax. Sure. Next. First of all, you have to understand, you have to decode the question. If you are able to decode the question, you can get the answer, I believe. Sagar, a chartered accountant, is presently working in a firm in India. He has received an offer for the post of chief financial officer from a company in New York. Now, this is a different kind of question. Now, in this question, you need not to solve it, but you need to advise Mr. Sagar how to reduce his tax liability. So again, even if you know all the provision, but this is the not the direct question, this is the indirect question to check your consultancy skills. As per the offer letter, he should join the company at any time between 1st September 2025 and 31st October 2025. He approaches you for your advice on the following issues to mitigate his tax liability in India. So he's asking, tell me something so I can nullify my tax liability in India from this job, whatever income I am earning. So he's asking you two questions. Date by which he should leave India to join the company, and direct credit of part of his salary to his bank account in Delhi, maintained jointly with his mother to meet requirement of his family. So he's asking you consultancy in two cases. He's asking, tell me the date by which I should leave India. So there would not be any tax liability. And what if I am crediting part of my salary directly into my bank account jointly with my mother? So do I need to change it or not? And now you can see, even if you have book in front of you, in which you have the residential status chapter in front of you, but you need a different kind of a skill to solve this question. So this kind of question in examination, maybe you will be able to solve it, but you need to take a lot of time to understand how to solve this kind of question. And if you already practice this kind of question in revisionary classes, now you know how to apply or how to solve these kind of questions. So this is again a very different trend type of question. Now again, because Mr. Sagar is working in India and he got a job offer in which he is going outside India for employment purpose. Now we know that if somebody is going outside India for employment purpose, the first condition would be applicable only. He is going outside India for employment purpose. So he need to fulfill only first condition, that is 182 days or more in India. So I will see until which date he would not be able to solve this condition. Why? Because I want Mr. Sagar to be a non-resident. If I would be able to make him a non-resident, so that means the income which is going to earn outside India, which is arise outside India because he's doing work outside India, as well as if he'll receive that salary outside India, he need not to pay tax because he would become a non-resident. So actually, the point number one is asking you technically or indirectly, tell me the date. When should I leave? So the status of non-resident I will achieve. So from September 1, 2025 till 31st October 25, you need to tell him the date till which he would be in India only up to 181 days. Technically, this point number one is asking you this, that you need to advise Mr. Sagar the date up to which only 181 days is there. So he need to leave on the day on which 181 days complete. How we will find it out? Very simple. April 30, May, June, July, August, and up to 28th September. So if he leave on 28th September, he would be in India for 181 days. So you can see how simple was the solution. We just need to calculate 181 days when it's going to be completed. And the answer would be 28th September would be the date on which Mr. Sagar should leave India to attain the status of a non-resident. Now the second thing, when he become a non-resident, only two income is going to be taxed, whether arise in India or received in India. But if he directly credit the part of his salary in his bank account, that situation that is going to be received in India, and on that he might need to pay tax, or he must need to pay tax in India. So we should advise that he should not receive the part of salary in his bank account directly. He could receive that salary in his New York bank account initially, and then he can transfer it or remit it into his Indian bank account. Because in case of remittance, the taxability does not apply. So can you see that? What different kind of question we just encountered in this class? And definitely it's going to, not only it's enhancing your skill to solve these kind of question, but it will enhance your skill for other chapter also, if that kind of question has been framed there. So now you know, okay, this kind of question I have solved in relationship status. So fine, this is the way I have to solve these kind of question. Okay, this is the value addition in your knowledge student. Okay, a lot of value addition. before 29 September, you should write it down. Gayatri, it's not on or before, you should write it down 28 September. Would be the date he should leave. Aditya is saying, sir, September 30 is last. How 28 September comes? You need to calculate 181 days from 30th April. Just a mathematical calculation. I need to calculate 181 number of days from 1st April. And I need to find out which date it would be. So 30 days from April, then 31. So as on, you have to add these days. And then 181 days would be ended on 28th of September. Okay. So in this question, why we need to classify as non-resident, he will not be a resident. No, we do not need to classify. We need to advise him that if you will become a non-resident, because Sagar asked you that I wanted that my salary should not be taxed in India, which I am going to earn in New York. So when it is possible, when he will become a non-resident. So we are just advising him that your status should be a non-resident. And he will ask how it is possible. So I will tell him you should leave India by 28th September 2026. So you will become a non-resident and the salary you are going to earn and receive in New York, that is not going to be taxed in India. Yes, Anmol, he can leave at any day from September 1 till 28th of September. Okay. Pranati Joshi, sir, if we write down for any time before 28th September, will that be correct? You should write it down up to before or up to 28th of September. That would be also a correct answer. Exactly. Clear? But because the question asked from 1st September till 31st October. So you cannot say before 1st September. So the answer should be he should leave from 1st September till 28th of September anytime. Because if you say from 1st August, June, that would be a wrong answer. How answer frame should done in examination. So as I have told you, the answer sheet I will upload in which the detailed answer, the manner, the approach is written there. So you can understand how to give your answer in the examination. Okay. Natalie is saying for tax liability only we are said he is not resident. No, because he have asked how I can reduce my tax liability. That's why we are advising if you'll become a non-resident, your tax would be minimized. Suppose, Natalie, you comes to my office. You are having, suppose you are in place of Mr. Sagar. You comes to me and ask, sir, I have got a job in New York. I have to leave between 1st September and 31st October. I want my salary in New York is not going to be taxed in India. So by which date I should leave? So I'm just telling you that from 1st September till 31st October, the last day is 28th September till 28th September. Your number of days in India would be only 181. So if up to 28th September, from 1st September till 20th of September, if you leave, you will attain the status of non-resident. That will help you to avoid your tax liability on your salary. I hope it's clear now. Very good. Chalo. Moving on next. Mrs. Ria, age 62 years, was born and brought up in New Delhi. She got married in Russia in 1996 and settled there. Since then, since her marriage, she visits India for 60 days each year during her summer break. The following are the details. The requirement of question. You are required to ascertain the residential status of Mrs. Via and compute her total income under default tax regime. Okay. So first thing comes first, we have to find out whether it's special case or normal case. So tell me, student, the special case or normal case? As you can see, she was born and brought up in New Delhi. So we are assuming she is a person of Indian origin. She got married in Russia in 1996 and settled there. Since then, and she's coming for visit to India for 60 days every year. So we have to find out, because she is a person of Indian origin and coming to visit in India. So whether it's in a special case or normal case, we have to find it out. Let me see what is your special. Amal is saying normal. Why Amal? Gayatri is saying special, special, special. Varna, it should be special case because person of Indian origin comes to visit India. That means it's a special case. Comes to visit India, a person of Indian origin. So that means only first condition need to be checked. 182 days she is in India or not. And as you can see, this condition is not fulfilled because she is in India only for 60 days. So she is not satisfying this condition, but we have to check income from Indian sources. If that is exceeding 15 lakh, then we can move on to the other special condition as well as deemed resident case. But because she is not a citizen, so deemed resident concept also cannot be applicable. But first of all, we have to check the total income. As you can see, this is 65,000, 3 lakhs, 60,000, 75 and 90. Even we aggregate all of this, his aggregate income even not exceeding 15 lakh. So that means 15 lakh condition is not fulfilling. So she is going to be a non-resident. Now, once you become a non-resident, the solution is easy because we just need to consider only those income, whether arise in India or received in India. One by one, we will check it out. Pension received from Russian government, of course, non-taxable. Long-term capital gain on sale of land at New Delhi. And it has been written computed. That means this is the income we need to include in her total income. 3 lakh rupees. Short-term capital gain on sale of shares of Indian listed company in respect of which STT was paid, both at the time of acquisition as well as at the time of sale. Computed. Again, this is our taxable income in India. Premium paid for sale to Russian Life Insurance Corporation at Russia. The next is rent received because we are under default tax regime, so deduction is not available. Rent received from New Delhi property 90,000, but we will consider only 70% of it. That would be 63,000. So total income would be 4,23,000. Deduction would be nil. So the GTI and the TI would remain 4,23,000. Very good. Moving on to next. Mr. Sudesh, age 58 years, a citizen of India. So as well as, again, citizen is there. So there could be multiple conditions, special, normal, as well as serving in the Ministry of Finance in India, was transferred to Indian Embassy in UK on 15th March 2025. His income during the financial year are as under. So the income detail has been given. The rent from a house situated in the UK, received in UK, thereafter remitted to India bank account. Salary from Government of India, foreign allowance from Government of India. This kind of provision we have discussed in basic concept provision earlier. The Suresh did not come to India during the financial year 25-26. So he is a citizen, he did not visit India at all. Compute his total income as per default tax regime for the assessment date. So as you can see, he did not visit the India at all. And in case of this provision, we have already discussed that Mr. Suresh would be a non-resident. And in case of non-resident, only income which is arise or received in India is taxable. You can see there is no income which is arise or received in India, but because he's a citizen of India, working on behalf of Indian government, and receive the salary outside India. So we have gone through the provision in case of income arise or deemed to arise in India, that if any person who is citizen of India is working outside India and the payment has been received by the government of India, that payment is going to be treated as income deemed to arise in India. And once income deemed to arise in India, it is going to be taxed in the hands of non-resident also. But there was an exemption. But all the allowances, in this case, all the allowances and perquisite which is received outside India is going to be exempted. Only the basic salary is going to be taxed in this case. So the basic salary is going to be taxed, assuming it is a income deemed to arise in India as per the deemed to arise provision. But allowances are exempted as per a special exemption. So the basic salary taxability is 9,25,000, and we are under default tax regime. So we can claim the standard deduction of 75,000. So the income or net salary would be 8,50,000 rupees. I hope it's clear. Simple question, of course. Now this is the incidence of tax question we are going to discuss. Mr. Tilak, age 35 years, furnished the following information regarding his income for the assessment year 26-27. Compute the total income if he is. So in this question, the status has already been given. Calculate his income in one situation when he is a resident and ordinary resident, and solve this question also assuming he is a resident but not ordinary resident. But in this case, one by one, and the question also says, ignore the provision of section 115 BAC. That means we are discussing it under optional tax regime. One by one, we will take up the income information which has been given in the question. Mithili is asking, so this foreign allowance is exempted because of government employee. There are multiple conditions, Mithili. That's why it is exempted. He's a citizen of India. He's working outside India on behalf of government of India. And in this situation, he will receive basic salary, allowances, and perquisites. So all the allowances and perquisite which is received outside India in this scenario is exempted. We have discussed it in basic concept chapter, residential status chapter, and I guess also in salary topic also we have discussed it. So first is rupees 50,000 for services rendered in Malaysia to a non-resident for business in Malaysia, credited to his bank account in Malaysia and immediately remitted to his bank account in India. So now tell me, this 50,000 is going to be taxed in which category? In this, is it taxable? Or in case of resident and not ordinary resident, is it taxable? Gayatri is saying ROR, Mithili is saying ROR, and RNOR. Aarti is saying not ordinary. Only give me the answer in which category it is taxable. Whether it is taxable for ROR or is it taxable for RNOR. Or you can write it down both. If you think it is going to tax in both situations, you can write it down. Mac is saying resident and ordinary resident. Varna Mandal is saying ROR. The correct answer is, of course, only in ROR. Because income arise outside India, received outside India. So it cannot be taxed in case of resident and not ordinary resident. The second is profit from a business in England controlled from Bombay. of rupees 3 lakh, out of which 25,000 is received in India. So can you tell me, out of this 3 lakh, how much is going to be taxed in ROR and how much is going to be taxed in RN? Manas is saying both 3 lakh, complete 3 lakh, both as per Simran. Anyone else? Methali is saying 3 lakh for ROR and 25,000 for RNOR. Methali, as we have discussed in the provisions, in case of RNOR, what kind of incomes are taxable? If it is arise in India, it is taxable. If it is received in India, it's taxable. If it is arise outside India, received outside India, but if business controlled from India, still it is full taxable for RNOR. The correct answer is this 3 lakh is going to be taxed for both category of person. 3 lakh, 3 lakh. Next. Amount brought to India out of past untaxed profit earned in Singapore, rupees 1 lakh. So in which category this is going to be taxed? Gayatri is saying none. Mayapri is saying only ROR. Next saying non-taxable for any, nil for both. The correct answer is non-taxable for anyone because it is past untaxed profit. We need to consider only that income which is relevant for our previous year. All past untaxed income, taxed incomes are irrelevant. Capital gain on sale of land in India, but received in Malaysia. So land was in India, automatically arise in India. So this is going to be taxed in both cases. Clear? Simple. Now income from agricultural land in Nepal of rupees 180 received there and then brought to India. So in case of resident and ordinary resident, whatever arise outside India and India is irrelevant. Until it is past year income, everything is going to be taxed. And this is not going to be taxed in case of resident and not ordinary resident. Okay. He paid 50,000 toward principal payment of loan taken for construction of his house. This is for deduction, etc. Interest on saving bank account deposit in State Bank of India of rupees 12,000. So this is going to be taxed for both interest income. Anything left? I guess no. So now this is our total income, out of which deduction for 80C we can claim in both category of 50,000 rupees. And deduction for section TTA in case of saving account interest we can also claim in both category up to 10,000 rupees. After that, we will have our answer. In this case, it would be 5,20,000 total income, and in this case, 4,52,000 would be my income. Clear, student? Okay. I guess MTP is having the last MTP question, question number 8. Just read it. Let me see if there's any query. This Mac is asking, Mithal is asking point number 6. What is point number 6? Let's see. He paid 50,000 rupees toward principal payment of loan for construction. So in case of deduction under section 80C, if you repay the loan amount, the principal part of that loan amount, housing loan amount, you can claim as deduction under section 80C up to maximum of 1,50,000 rupees. So we have claimed that deduction under section 80C. So you should go and revise deduction provisions mentally if there is any confusion for point number 6. Yes, Mac, you will get the step marking, but how that step marking is going to be done, that would depend upon the course on the institute. Okay. So question number 8. Mr. Madan, citizen of India and Karta of an HUA. So in this case, he is citizen of India and Karta of an HUA. So I believe in this question, they will ask you to find out the residential status of both. Is employed in Messrs PCS Private Limited, drawing salary of so much amount, 65,500 rupees monthly salary. On June 125, he purchased a residential house, 18 lakh. The market value is 32 lakh, and the value for the purpose of stamp duty is 23 lakh. That is for capital gain. On August, he was transferred to the branch office, and so he left India on this date. So this is relevant for us. He left India on 1st September 25. Overseas branch paid him a salary of this much amount in USA. He managed business of HUF from USA when he was not in India. So when he was in India, he managed the business from India, HUF business, and when he is outside India, he managed that HUF business from outside India. He also gone out of India for 99 days and 201 days in previous year, 24, 25, 23, 24. He had never gone out of India prior to that. Okay. He visited India from January 1, 26 to 15 January 26 for training on a project and received 15 days salary in India as per his Indian monthly salary before being transferred. Mr. Rajiv, one of his friends, gifted him a sculpture in India on August 10, 2025. The market value is rupees 45,100. Now, what is the requirement? Determine the status of Mr. Madan, residential status, and his HUA, and compute the gross total income of Mr. Madan. So, our main focus is on to find out the residential status. And now you can see if we'll find out the status of HUF. So as the question says, HUF has been maintained from India when he was in India. So control and management was partially in India, and when he was outside India, the control and management was outside India. But certain part of control and management was in India when he was in India. So if HUF is partly controlled from India, what would be the residential status of HUF? Resident or non-resident? The answer would be resident. The HUF will be treated as resident in this case. Clear? Now we'll need to find out, first of all, the residential status of Mr. Madan. For that purpose, we have to see, because he is going outside India for the purpose of job. He is a citizen. And citizen is going outside India for the purpose of job. So only first condition is going to be applicable, that is 182 days or more. Clear? Now we will calculate how many number of days he was in India. So he left India on 1st September 2025. So April 30 days, May, June, July, August, and September 1 day. And in January, he came back for 15 days also. So total number of days is 169 days. So he will be a non-resident. Clear? But now we need to find out the sub-classification of HUF, which is based on the Karta, which is Mr. Madan. Now, the HUF would be regarded as resident and ordinary resident if it fulfill both of these conditions. Because for the purpose of individual, we find out resident and not ordinary resident based on certain condition. But for the purpose of HUF, we have to check out resident or ordinary res condition, and both conditions should be fulfilled. The condition number one is Karta must be in India for 730 days or more in 7 PPY. So as you can see, the question says that only in 23-24 and 24-25, he was in India for 99 days and 201 days, except that he was always in India. So out of 7 years, if you reduce out of number of days in 7 years, if you reduce 99 days and 201 days, of course it will be more than 730 days, lot more. So this condition is satisfied. He is in India for more than 730 days in 7 PPY. Condition number two says he should be a resident for 2 years or more out of 10 preceding previous. As you can see, he was never gone outside India except in these 2 years. So all other year he was in India for full 365 days. So he must be satisfying 182 days condition, almost in 8 or 9 preceding previous year. He is resident in India. So he's resident in India for almost 9 years. So technically, any of both condition is fulfilled. So the HUF would become resident and ordinary resident in this situation. So that would be the answer of this question. Okay. So now after this, we will take the RTP question, which is May 2026 RTP question. We are going to discuss after this. After a short break, we will come back, and after that break, we are going to discuss this RTP question. So let me see if there's any query. No queries there. So Ashok sir, can we take a short break? Thank you, sir. believe you must have your tea, coffee, water, whatever it is. And we were discussing the provision of basic concept in our revision class. Till now, you have seen that how a question need to be attempted, how to find out the important components, ingredient from a question to solve our question in the examination, how information need to be sorted, and how the solution should be in part always. It should not be that we need to solve the whole question at one go. That will create pressure upon you. So whatever information you are collecting, you can solve according to that in your examination. And of course, the first thing to do always to understand the requirement of question. That exactly very important for solving of any question. Somebody is asking, previous year, these questions are based on previous year question. You should also try the previous year question yourself for at least 3 or 4 or 5 attempts. And you will see out of those questions, 50-60% would be the same question what we are discussing as MTP or RTP question. But you should try them also. Chalo, let's move on to the next. Again, an important and interesting question. Mr. Subhash, an Indian citizen, is currently in employment with an overseas company located in country X. Okay, so he is working outside India. He is a citizen of India, so that special cases could be applicable. During the previous year 25-26, he comes to India for 135 days. So a citizen who is residing outside India, working outside India, comes to visit in India in previous year. He is in India for 100 days, 50 days, 76, 45 in the financial year so and so. His annual income for the previous year 25-26 has been given over here. Income from salary earned from country X, income earned and received from a house property in country X, income deemed to arise in India, income from retail business, accrue received outside India but controlled from India, income accrue arise in India. Determine his residential status. For the assessment year, he is not liable to pay tax in country act. This information is very relevant. Now suppose if during reading a question, you miss this information. You did not read the last line, you just read it, okay. The question is asking me to find out the residential status. Let's move on. And you skip this information, that is going to cost you a lot. Because this is something which is going to impact this question. Because this is a condition which is applicable in case of deemed resident, that you should not be liable to pay tax in the country in which you are earning income. So in this information shows that possibility of deemed resident concept is also there, but we start it as a normal question. So Indian citizen, you can see residing outside India, come to visit. So in case of visit, more than 182 days condition is applicable, which is not satisfying because he comes to India for only 135 days. So this is not going to be satisfied. Now the second special condition for the purpose when somebody is visiting India is, if you are having income more than 15 lakh from Indian resources, and if you are a citizen or person of Indian origin, income exceeding 15 lakh from Indian sources, then there would be two conditions, 182 days, or a new condition will emerge, more than equal to 120 days in previous year and more than equal to 365 days in 4 preceding previous year. So if you fulfill any of it, you will become a normal resident. So for that purpose, we have to see the income from Indian sources. So as I have already ticked it, these are Indian source income. The aggregate is 16 lakh rupees. So technically that means income exceeding 15 lakh. So this condition is not satisfying in this scenario. Now we'll move on to the second condition, 120 days. Yes, he was in India for 135 days. So this first category of second part is satisfied. But now for 365 days, the last preceding 4 years stay in India has been given as follows: 100 days, 50 days, 76 days, 45 days. Total would be 271 days only. The aggregate is 271 days. So this is also not satisfied. So he cannot be a resident as per these two special conditions. But now this information comes into the picture. Now we will switch to check whether he could be a deemed resident or not. The condition is he should be a citizen, that is satisfied. Indian source income exceeding 15 lakh, that is satisfied. And he is not liable to pay tax in the country in which he resides, that is also satisfied. So all three conditions satisfied. So he will become a deemed resident under section 61A. Because number of stay condition is not applicable in case of deemed resident. Even visiting India is not a condition in case of deemed resident. If these three conditions fulfill, you will automatically become a deemed resident. And a deemed resident would be automatically a resident and not ordinary resident. The correct answer is he would be a resident and not ordinary resident. Now you understand how this process should be applicable in the examination. How we need to process this information which has been given in the question one by one. Clear? Now we will see some case scenarios. One by one, we will check these case scenario cases. One by one, we will discuss these cases. Let me see if there's any query, etc. Aditya asking which previous year question should start, at least for last 5 attempts. Not year, last previous 5 attempts question you should attempt. Okay. So, case scenario. Mr. Shashikant, age 45 years, is an Indian citizen. Now, in the case scenario question, it is more important that first of all, see the multiple choice question, because if you read the full information, that is consuming your time, because in this they could also ask to calculate the tax liability, etc. But because we need to focus on the residential status question, so we will see what is the requirement of question. So on that information only we will focus. Shashikant, the residential status we have to find out first of all. So we will only process the information which is connected with the residential status of Mr. Shashikant. Indian citizen and a member of the crew of a Singapore-bound Indian ship engaged in carriage of passengers in international traffic departing from Chennai port on 29th May 2025. Now, in case of Indian citizen, if that is a crew member of an Indian ship going outside India, for the purpose of residential status, the special case applicable, which says only first condition is applicable, 182 days or more. But the calculation process of these 182 days in India is different. In normal cases, we calculate number of days stay in India. But in case of crew member of an Indian ship, we have to subtract the number of days he's stayed outside India from the total number of days in a year. Because this year is previous year, 25-26, not a leap year. So total number of days, this kind of question we have already solved in the study material illustration. I guess number 1 was there. So total number of days is 365. Now we need to reduce days stayed outside India. So the balance would be as days inside India, and that is going to be compared for this 182 days. For the purpose of calculating number of days outside India, the provision says you need to calculate the number of days from the date entered into the continuous discharge certificate, which is 29th May 25. So from 29th May 25 till date entered into the continuous discharge certificate, that is 19th September. So date entered and discharge certificate, this time duration would be treated as outside India. So from 29th May till 19th of December 25, if you will calculate number of days outside India, that will be 205. And out of 365 number of days, if you will reduce 205, so that would be 160 days. And it is less than 182 days, so we will become non-resident in India. The answer is non-resident. Now let me tell you, student, this is also a question which is having a specific provision which you did not attempt in any question. You will see this question is very relevant due to that provision. Now, question number 2 is asking, what would be the total income of Mr. Shashikant for assessment year 26-27? For the purpose of total income, now we will see whatever he is earned as a non-resident. He stayed in India for last 4 years. All this information is irrelevant because he becomes non-resident till now. He received salary of 7,20,000 in his NRE account maintained with State Bank of India, Chennai branch. So initially you will feel that the income received by a non-resident should be taxed in India because he received that amount in India, 7,20,000 rupees. Now, this is very, very important point for the purpose of examination. This is not going to be taxed. If a crew member earn any income, even if he's a non-resident and salary received, if the salary received in his NRE account in India, general rule is if a non-resident received income in India, it's taxable. But there is a special exemption in case of crew member of an Indian ship. If they receive salary in their NRE account, a special circular gives you the exemption from the taxability of this. And this circular number 132017. This exempt this income from the taxability. Now you must be thinking, where is the circular has been mentioned? In the study material and in the notes. Both the circular and this provision has been mentioned. You can go through notes page number 3 when we have discussed the detailed provision. The notes page number 13. You will find out this provision, and on the study material, if you want to check, that is on page number 2.16, you will find this provision that if a crew member of an Indian ship who is a citizen of India, if receives salary in his NRE account, then that is going to be exempt as per circular number 13/2017. And you can refer study page number 2.16 or my notes, whatever we have uploaded on the portal. On page number 13, it has been prescribed. Clear? So this is a very, very interesting point. Now understand, if any of your friend did not take this class, and suppose if this information question has been framed, what he or she will do? They are going to tax it because they did not attend this class. So that is going to be a huge loss, because as soon as your salary is going to be exempted, your answer and their answer would be varied. Your GTI, TI would be different and their GTI, TI would be different. So that's why these classes are so important, because we are discussing these kind of special points with you. And you will not going to forget these kind of thing. And when the examination, this kind of point would be there, you will remember me, you will remember POS, you will remember ICAI, and you will thank all of us. And we will be proud of you. Chalo. So that was the income which is going to be exempted. Now, except that income, dividend declared by X Limited, a Singapore company, the same was received by him in Singapore. So because he is a non-resident, this is not going to be taxed because received outside India and arise outside India. Agricultural income from land in Pakistan received in India. So as we have discussed the Colombo agricultural income, so that is not agricultural income because it is outside India. And because it's received in India, so that is going to be taxed fully. 2,50,000 is going to be taxable income. And rent receipt from house property in Chennai, and that has been written gross. That means 30% reduction we can claim. So the balance 70% is going to be income from house property. That would be 2,52,000. So the taxable income would be 5,02,000 rupees, which we need to opt from the solution. The correct answer would be option number C. In case of first MCQ, the correct answer was non-resident. Okay, moving on to the third MCQ. Assume for the purpose of answering this question, only this point number 3 question, that Mr. Shashikant has transferred his house property in Chennai to his minor married daughter. Now, that is a clubbing provision. In the clubbing provision, I believe that you must have gone through with the clubbing concept. And if the property has been transferred to minor married daughter. So my question to all of you is, if the property is transferred to minor married daughter, then what is the consequences? Mr. Shashikant is going to be treated as deemed owner of that property, option 1, or he's not going to be treated as deemed owner, but the clubbing provision on income will apply. So you have two options. If the property has been transferred by any individual to his minor married daughter, option 1. In this case, whether deemed owner concept will be applicable, or second option, clubbing concept would be applicable. Which concept would be applicable in case of property transferred to minor married daughter? Amal Roy is saying he's going to be deemed owner. Okay. Shashikant clubbing. Gayatri, Shashikant will not be a deemed owner. Mathili is saying Shashikant clubbing concept. Okay, I'm expecting more answers. Simran, clubbing provision will apply. Deemed owner concept is only in case of spouse, I guess. No. Deemed owner concept is in case of spouse, as well as son's spouse, as well as minor childs. In all three categories, clubbing provision apply under different situations. Okay, anyone else? Aditya is saying clubbing provision. Well done, very good. So deemed owner concept would not be applicable in case of property transfer to minor married daughter. If property has been transferred to any other minor except minor married daughter, then deemed owner concept applicable. But if the property has been transferred to minor married daughter, then clubbing concept would be applicable on the income generated from that property. Okay, very good. So on 1st April, and his wife is a housewife and does not have any income. Because wife does not have any income, that's why clubbing is going to be in the hand of Mr. Shashikant, who is having higher income. The minor daughter received the rent from the house property. In such case, what would be his total income if he has shifted out of the default tax regime? Can you tell me the difference between default tax regime clubbing concept of minor child and under optional tax regime clubbing concept of a minor child? If there's any difference between clubbing concept of a minor child in case of default tax regime and optional tax regime? Gayatri saying 1,500 rupees in OTR. Absolutely right. Well done, Gayatri. In case of optional tax regime, you can have exemption of amount clubbed or 1,500 rupees, whichever is lower. So in case of default tax regime, there is no exemption. So you can see the smartness of a teacher. They specifically say, assume you are out of the default tax regime. So that's why they want to know whether you have remembered this 1,500 exemption or not. Understood? And exactly they are giving you a hint also. that you need to be out of that default tax regime. So you might recall why the question is saying you are out of the default tax regime for specifically this third number MCQ, because they want you to apply that 1500 rupees basic exemption. So now if we calculate the income, the rental income was 2,52,000 because rent received was 3,60,000. 70% taxability was 252. But as per now clubbing exemption, we will tax 250, 500 as income from house property, and agriculture income from Pakistan would be 250. So total income in this case would be 5,500,000 rupees. So in the third point, the correct answer would be option number A. The detailed solution will be uploaded. You can download that file from the portal. Now, one request from my side. I believe that you are already revising all the provision, but if it is not, because in the next class, we will have the revision class of salary and house property. So it's a request from my side on day after tomorrow and 17th. Please revise salary provision and house property provision with some question also. Some important question, whatever you think important question, you must have marked in your study material, etc. So 3, 4, 5, 6 question you should revise and just go through with the topic of salary and income from house property once before attending the class of day after tomorrow. You will see the difference. If you are attending today's class without revision, you might have some problem in understanding the provision. And then now try to revise those chapters before the day after tomorrow class, and you will see the difference. How easily you will be able to understand the solution process, whatever we will discuss in that class. Okay. Sure. Next, point number 4. Mr. Shashikant would like to minimize his tax liability and consulted you to compute the same for previous year 25-26. Accordingly, his tax liability rounded off would be. Now the income was 5,02,000 rupees. We are taking income as per MCQ number 2, not as per 3, because for MCQ 3, he specifically said only for this point you have to find out this income. So point number 4 is going to be solved on the basis of this income, 5,02,000. So to minimize his tax liability, we have to find out the taxability under default tax regime as well as under optional tax regime. So can you calculate the tax liability under both the regime in this question, under default tax regime? Itna I can expect from you, because very simple question. You have to find out the tax liability under both the regime. And when we say the tax liability, we mean you have to find out the tax as well as apply the rebate if applicable, as well as apply the surcharge if applicable, as well as apply the cess if applicable. So can you calculate the tax under default tax regime and optional tax regime in this case? The minimized tax would be our answer, but I would like to see if you are able to calculate the tax under this scenario. That would be easy for us. Very simple question. You must have a calculator whenever we are discussing practical questions. I got an answer. Gayatri Sethi is saying nil. Gayatri, in which default tax regime or optional tax regime? Maithili is saying default tax regime is 5,100. Okay, as per Gayatri, default tax regime is having nil. Okay. Maithili has calculated 5,100 rupees tax in default tax regime. How? Simran is saying both nil. Okay. Can you see the options, every one of you? Maithili, when you say 5,100, you can see the option. In options, there is no 5,100 is there. So how it's possible? Either it would be 13,420, 13,210. We have to take the lowest of tax liability. So the lowest, there is no option of 5,100 is there. Try it. It's an easy question, but a tricky one. Anyone else? बताओ बच्चों बताओ. I am waiting. You know what will happen? If you will give answer, you may be wrong, but you will learn a very interesting point today. So you will not repeat this mistake. So if you are thinking that you have calculated, but you are hesitating to send your answer, do not worry about it. You will learn. तो किसी ने कहा है, I have heard somewhere, you never lose if experience is the goal. So even if you lose, if you are wrong, but if you take the experience from your that wrong answer or your uh, losing something, you are never going to lose anything. So I'm waiting for answer. Anybody wants to give their answer? Okay, I guess I should solve it. Vishaka is saying nil as per default. Look, in this case, because when we solve this question in MCQ 1, the status was non-resident. Non-resident cannot take the benefit of rebate. Rebate is only applicable for individual, those are resident. So in both cases, default tax regime as well as optional tax regime, rebate is not there. So for default tax regime, up to 4 lakh is exempt. On balance, 1 lakh 2,000. The tax would be including the cess. Just a second. 5,100 would be your tax and 4% cess you need to add. That is 204. So it would be 5,304, but round off multiple of 10 rupees. So that would be 5,300. Can you see that? Now in this case, the second case, if you calculate tax up to 2,50,000, no taxability. Next 2,50,000 tax because non-resident. The tax rate would be 5% and balance 20%. So tax would be 13420 inclusive cess. So in that case also rebate not applicable because income exceeding 5 lakh as well. But in this case also not applicable. Why rebate is not applicable? Because he's a non-resident. So the lowest tax would be my answer and the lower is 5,300. So that is going to be your answer in this MC. Understood? So always remember, rebate is not for non-resident. In majority of cases in this question, student will try to solve and mark the answer nil because they think, okay, income is 5 lakh 2,000. So lower would be after rebate up to 12 lakh, there is no tax. So the answer would be 0 and this would be lower. And exactly that's why they have given you an option of nil tax. They know that you will think the tax is nil, so you will mark it like nil and your marks would be nil in this point. So please remember, if you think something is too easy to solve, this is CA examination, not a BCom examination. So if you think something is very easy, check it twice, double check it. It cannot be, I believe. Sure. Next is case scenario 2. This is for agricultural income. Mr. Kishan is engaged in the following activities on agricultural land situated in India. Total area of land is 5 acres. Now, in this question, you will see how the question requirement is important. If you will see in this question, you will see you need to find out what is the requirement of question. You will feel that other options are also correct, but when you will find out the requirement of particular MCQ, you will able to find out the correct choice. Now, point number 1, look what it is exactly asking. What amount of income arising from activity A would constitute agricultural income in the hands of Mr. Kishan? We generally think that if there is agricultural income, we have to write it down that is exempted, nil. But they are not asking you taxable or non-taxable. They are asking you have to find out from activity A what would be the agricultural income out of these A, B, C, D options. So we need to just find the agricultural income, not the taxable income. So in activity A, if you will see, he grows sapling or seeding in a nursery spreading over on 1 acre land. Generally, we read this provision like that nursery operation income is exempted. And as soon as I will read it activity A, I will find it out, okay, taxability is nil. The question is different. The question is not asking you what is exempted or taxable in activity A. They are asking you what is agricultural income in case of activity A. So they are in the business of growing in sampling in a nursery business. The income is agricultural income and exempted, but we have to find out the agricultural income, the normal business income. The sale proceed is 5 lakh. Cost of plantation is 140. So technically the net profit is 3,60,000, which is agricultural income, which is exempting. But the question did not ask for exempt or taxable. They were just asking, tell me the agricultural income from this activity. So the answer would be 3,60,000. Understood? So that is very important to listen what question is saying. I always believe question speaks to you. Technically, sometimes it shouts. We did not generally listen what exactly they are saying. So we are not reading. You should understand what they are saying. If you will understand the problem, ठीक से, you will be able to solve it. ठीक से. So what exactly now MCQ2 you will again see what exactly they are asking. You will be able to solve the question. But if you did not read what the question was asking, you will choose multiple answer as your answers. Now, what amount of income from activity B with respect of sale of cotton would constitute? Again, they are asking agricultural or and business income in the hands of Mr. Kishan. Now we just need to focus on activity B. Okay, tell me one thing. Activity B is an activity for cotton. Is cotton included in those composite business having a specific percentage to find out the agricultural income or non-agricultural income or not? There were 3 businesses having a specific rate to find out agricultural and non-agricultural income. Does cotton produce was the part of it or not? Just tell me this thing, whether it's a part of that business or not. I believe you all know the answer of this question. Of course not. So that is a case of like we have discussed the normal class like sugar and sugarcane. And in that case, I've told you we have to prepare separate trading and profit and loss account for agricultural activity separate and for non-agricultural activity separate. Now, activity B is also having 2 parts. He grows cottons on 3 acre land. 40% of cotton produced is sold for 4 lakh rupees. The cost of cultivation of which is 2,25,000. So in this part, he grows cotton on 3 acre land. 40% of this 3 acre land cotton has been sold for 4 lakh and the cost of cultivation was 2,25,000. So that is pure agricultural activity. There is nothing like manufacturing there. You just produce the cotton, you sold the cotton. This is pure agricultural activity. So technically the sale price is 4 lakh. The cost of cultivation, because he did not manufacture anything out of this cotton, and 225 is cost of cultivation. So technically the net profit is 175, and which is agricultural income pure. There is no composite business in this activity, but it is in the next part. The cost of cultivation of balance 60%. So now the balance 60% part is having 2 activities, agricultural, non-agricultural. For agricultural, we have to make separate P&L. And for non-agricultural, we have to prepare a separate P&L. Balance 60% cotton is rupees 3,37,500 cost of cultivation. And the market value is 6 lakh rupees. I have told you, for agricultural calculation, you have to take the market value as your sale consideration, and you have to take the cost of cultivation as your purchase price. So technically, the net profit would be, I have already calculated it, 2,62,500. So from this activity, this is agricultural. And whatever will be your selling price in case of agricultural, that would become your purchase in case of non-agricultural activity, manufacturing activity. 6 lakh would be my purchase price. 1 lakh is processing cost. And 850 is my selling price of yarn because you manufactured yarn from it. Correct? The final product is yarn. So now the net profit would be 1,50,000, which is non-agricultural. Now we have net profit from pure agriculture activity from activity B. We have agriculture income from composite business activity 262,500. We have business income, non-agriculture activity 1,50,000. Now look what question was asking. What amount of income? Now if I'll write it down the solution part, whatever we have find it out, it was cotton, agricultural income, that was 1,75,000. Then composite business, agricultural income was 262,500 and non-agricultural income was 150. Now you need to answer which is the correct option. You have 4 options. Let me minimize this so you'll be able to see the 4 and the choices also. Can you tell me the correct answer? In front of you, you have cotton agriculture income given, composite business agricultural, non-agricultural given. You have 4 options, which is correct. Okay, 4th is not correct. Chalo, only 3 out of 3 you have to find out the correct answer. Let me see what is the correct answer according to you. Gayatri is saying C, Mathali is saying A, Sivaran is saying A, Mahak is saying C, Manas is saying it. Now, look the beauty of this question. You have all the answer in front of you. I have solved each and everything for you. Even still, your answers are not united. Someone is saying A, somebody is saying B, somebody even saying C also. Why? Why it's happening? The solution in front of you, full solved question in front of you. Still, you are not able to understand what exactly they are asking. Now understand, the correct answer is A. Because he asked from activity B, respect of sale of cotton. They want to know the agriculture income from sale of cotton. This is, we find out from the sale of yarn. Actually, cotton has not been sold in this. What product has been actually sold? Actually, yarn sold, and we bifurcate the agriculture part of that yarn, which is related to cotton. But practically, cotton is not sold in the market in this case. We just find out the profit on the basis of fair market value of cotton. Actually, the cotton real sale was only in this part. And in this part, the agriculture income was 175. And absolutely, I can understand. Most of the students would be confused. What should we write it down as a correct answer? So these classes is just to expand your knowledge in a different way. Even we have the solution is in front of us, but we have to understand how to select the answer in MCQs. Okay, it's a very, very interesting question. You can go through in the 3rd point, 4th point, everything has been uploaded. All the questions, case scenario has been uploaded on the portal. And the solution I will also upload so you can solve these points. Let me tell you, we will discuss multiple MTP in this, multiple RTP and multiple case scenarios. Almost, I believe 30 case scenario cases there, and all case scenario is having 4 or 5 MCQs. So technically in case scenario, you are actually practicing almost 150 questions. And if you include MTP, RTP of also, almost you have a package of more than 200 questions for revision. And your test and knowledge question from study illustration also there, and 2, 3 last attempt question. So if you're able to solve all these things, if you are going through all these type of question, I assure you, you will be able to clear this subject very easily. And not about this subject, for every subject, Institute has provided you MTP, RTP, case scenario. If you go through that, that would be enough. And you will learn a lot of things when you will go through these case scenario, etc. So student, ask if you have any query, because we need to close the session today because I have to rush somewhere. So it's 8:32. I have to go to some place. So if there is any query, please ask. Sir, how shall we come prepared for next class? I have just told Amal, please go and revise the salary topic, income from house property, and solve some important question so you will be prepared for the next class. Okay. Anything else? No query on query portal also. Mathli saying thank you, sir. Session very useful. Welcome, Mathli. Ashok, sir, I guess there is no query left. So can we close the session? Yes, yes. Sir. Good night, sir.